After a year of terrible news in the mortgage industry with rates going up and up and up and seeing the highest rates we've seen in 20 to 30 years, we are finally getting some good news in the mortgage world. In the last 2 months, rates have gone from the average 30-year fixed being about 8% to the average 30-year fixed being about 6.625. This is a little over 1% difference, which is huge. So a lot of people have started to talk about, well, when should I refinance? When is it going to be a good time for me to get a better rate that I have been waiting and waiting for? Well, as a wise man once said, you cannot perfectly time the market. So the best thing that you can do is just go take a stab at it. And so we're going to talk about what the benefits are to a rate and term refinance today, as well as what's the potential cost savings and when should you actually look at doing it. Let's take a look. Before we get into the example, let's actually talk about what a refinance is, because it's a very common term in the mortgage world. And if you're a newer homeowner, or maybe you haven't heard it before, you want to understand the benefits, it's good to know what it is. There are two basic types of refinances, though they have a multiplicity of different uses and benefits. First one is a rate and term refinance, and it basically does exactly what it sounds like. You refinance your home to get a better rate or a better length of your mortgage, whether that's going from like a 15 or from a 30-year to a 15-year fixed rate mortgage, or maybe you're going from, let's say, a 7% interest rate to a 6.5% interest rate. Those are the two different ways that you might see a rate and term refinance. The other one is a cash out refinance. And so that's the scenario that maybe you put a decent amount down and your home has now appreciated in value and you want to take advantage of the value of your home. You would get a new loan for a higher amount, and it's going to cover the current balance of your home, as well as maybe some home improvement costs. Maybe you want to take out some money to do that, or you have a lot of consumer debt and you want to take advantage of the equity in your home and pay off a bunch of those debts, which would maybe lower your total monthly payment of all of your debts, which is a great option even as rates might be a little bit higher than what you have previously. Credit card rates are still really high. So that's another way to refinance, though we're not going to talk about that as much today. Let's talk about the rate and term refinance. We're going to take a look at an example with a $400,000 loan amount with a 7% interest rate, and that same $400,000 loan amount with a 6.5% interest rate, just to give you an idea of what that cost savings is going to look like. So let's take a look at that example. All right, so forgive my chicken scratch here, but you'll get the general idea. So let's say your initial interest rate on a $400,000 loan was a 7%. Your monthly principal and interest P&I payment is going to be around $2,663. And the total interest over the life of the loan, over the course of 30 years, is going to be about $403,317. That's, let's say, what your initial loan terms are. Now, if you were to refinance, and let's say you even were saving 0.5%, let's say you were able to secure a interest rate of 6.5%. Your monthly P&I payment is going to be about $2,527, and the total interest paid over the life of the loan is going to be $365,987. That comes to about a difference in your monthly payment of $135 every single month saved. I don't know about you, but with my family of 5, $135 can go a long way. Over the course of the entire length of the loan, that's going to be saving $37,330 over the life of the loan in interest payments. So you can see that even just a 0.5% difference, you can save a good amount monthly. So it might be beneficial to refinance at the point of getting a 0.5% better interest rate. I hope that quick example really showed you the benefits to doing a rate and term refinance, even with just a 0.5% difference in that rate. It's something that may not necessarily be for everybody, but can be a huge benefit. Another benefit for the rate and term refinance is that you have the ability to lose your private mortgage insurance if your home has appreciated in value to a certain point. It's pretty awesome, and I think a sleeper benefit that as homes have increased in value, you might be able to refinance to lose that principal and interest, and so you can get the benefit of saving on your interest rate and losing that PMI, which could be hundreds of dollars every single year, or every single month, which is fantastic. So if you are in Florida and you would like a free estimate on whether or not rate and term refinance is a good idea for you, reach out to me. My contact information is below. If you have a question on what it would take to refinance, feel free to drop that in the comments. Like and subscribe for more information on home buying and refinancing and all of that stuff, which is great, hopefully beneficial information. Again, thank you for watching. We'll see you in the next one.